Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, September 22nd, and this is the weekly market update. So getting right into it, let's talk about pot stocks. This is a chart of a stock that was in the news a lot this week, and the name of the company is Tilray, and I did a quick perusal of it to determine what it does. Evidently it produces cannabis-based oils and dried leaves and flowers that are supposed to have medicinal purposes. As you can see from the chart, it's been very volatile. It shot up from about 38 bucks a share about a month ago to an intraday high of around 299, and on Friday it dropped about 50 bucks. And let's talk about this, because this is another educational theme. When I started doing this video series, or doing these videos and restarting my blog late last year, early this year, one of the first articles I wrote was about Bitcoin. And the article basically said that my view around Bitcoin being a bubble. Subsequent to that, it crashed from about 19 or 20,000 to whatever it is now. I don't even pay attention to it anymore. It's 6,000, something like that. And the emphasis of the article was the psychology of the markets and FOMO and fear of missing out, and how shoe clerks, schlubs, and bleacher bums, i.e. retail investors, get sucked into these things over and over and over again. And there's been books written about market manias, panics, bubbles. I've listed them, and yet people, email me, and I can guarantee you there's going to be, in the comments of this, at least one or two people are going to pop off and say, no, you don't get it. It's different this time. I'm going to say this until I'm blue in the face. It's never different this time. And I'm going to tell you why. So whatever bleacher bum now is getting all red-faced and is getting ready to write something in the comments, pay attention. I don't really know that much about pot stocks. I know people like to get high. I'm 51 years old. People smoked pot in high school. People like to, party. I get it, okay? And I have read about the possibility of various medicinal purposes and ailments being able to be treated by derivatives of cannabis. But something most people don't realize is that in a capitalist society, if you have a product or service and you create it, you come up with the idea, and it's successful, and you have very high profit margins, if you don't have one thing, you are going, if you're missing one component from that, you are going to be unsuccessful. And the component is a moat. So if you have very high profit margins and you're showing a tremendous amount of sales growth, and you're in an industry that's growing massively, and you don't have a moat around your castle, you don't have something that keeps the competition from being able to come to your market, what's going to happen is capital is going to be attracted to those higher profit margins. Entrepreneurs are going to start businesses and compete against you. And then you're going to have what's called reversion to the mean. That is why you have this constant creation of companies and destruction of companies in capitalism. As high profit margins are created in an industry, unless you can create a moat or a monopoly or an oligopoly, then you're going to attract competition. Now, in some businesses, like, let's take for an example, like a company like Coca-Cola. If you wanted to compete with a company like Coca-Cola, it's sugar water, guys. That's all it is, right? It's corn syrup, flavoring, and coloring, put it into carbonated liquid. But the deal is, why that company was so successful is it was one of the top brands in the world. So if you wanted to start from scratch and compete with them, you would have to invest hundreds of billions of dollars. Well, that's the moat that they have. They have that 100-year start on you. They have that, down south, for example, they don't call soda pop soda. It's just everything is called Coke. If you want a Mr. Pibb, say, I'm going to get me a Coke, and you go in there and grab yourself a Mountain Dew or a Mr. Pibb. That's just how it is. So it's ingrained, it's understood, it's got tremendous amount of marketing and size, and anytime a new beverage category shows up, PepsiCo and Coke just go out and buy the competition and then integrate it into their chain of supply. So let's talk about pot. I mean, guys, I can remember in high school, kids that I went to high school with growing pot. It's not like rocket science to grow a pot plant and get it to produce. This idea, well, they have premium blends, John, and you don't understand the higher THC and higher CBD levels. This is all genetic engineering. And no, I get it. I get it. It's basically a pot plant. I'm right now working on a wind farm in Illinois, and we have all kinds of corn being harvested right now. And it's not a very good business to be in because the price is low, because it's really not that hard to grow corn. And yes, they have genetic variations of corn that are drought resistant, weed resistant, disease resistant. Tremendous amounts of money have been invested in creating these various varieties of corn, but yet it's very hard to make money growing corn because it's not that hard to grow corn. Put corn seed in ground, spray nitrogen and phosphate on it. Hopefully it rains, you get a harvest. Not too difficult. So even if there is tremendous amount of demand, even if there is tremendous amount of interest in marijuana, and I know that, you know, recreational use is going to be approved in Canada on October 17th. So that's the big run-up in all these demand projections. But like I said, if there are, in fact, these huge profit potential, it's going to draw a tremendous amount of capital, and that's exactly what has happened. Not only that, even if the price does stay high for legalized pot, you're still going to have illegal pot coming into the picture if it's profitable. So the bottom line is that we get into these little trends or these little themes that come along. The media hypes them up. Wall Street, Howe Street, Vancouver, they hype this stuff up. The media hypes it up. And then the shoe clerks and bleacher bums get it in their head that, man, I can put $1,000 in this and I'll be a millionaire in a year. And this is what you have here, where a stock goes from up basically 10 times in a space of 30 days. And then it's amusing to go on a site like Seeking Alpha and watch the bleacher bums make excuses and make up reasons why this stock is not only going to maintain its high price, but go even higher. I mean, the thing is up 10 times in 30 days. Take your money off the table. Now I'm going to show you why. Now, this isn't for most people here. Most people that listen to me, most people that interact with me are rational people and they get it. But this is for the, 80-20 rule, Pareto's law, the 20% of bleacher bums and shoe clerks that, constantly get sucked into these things and end up walking away with massive losses. I mean, let's be honest here. Somebody bought at $299. There was a transaction here. Somebody bought shares at $299 and had it justified in their pea-brain why they thought that this was a value. So, like I said earlier, on August 23rd, the stock was selling for $38 a share. It has a market cap currently, right now, of $11.4 billion. So it would cost you $11.4 billion to buy a company with last quarter sales of $9 million. Think about that, guys. You would have to spend $11.4 billion to buy a company that had $9 million in sales last quarter. Now, the sales were up 100% year over year, but there's still $9 million of sales on a run rate of about $40 million a year. You're paying $11 billion for that. Oh, and by the way, on that $9 million in sales, the company had a $12 million loss. Nice. So the stock kind of peaked out around September 19th at around $299 a share. It's down massively since then. It's about $130 a share. It dropped $50 on Friday. I don't know if these numbers are updated. I got them off a site that does this, but anyways, it's pretty close. Current price to sales is 402. I mean, I don't normally buy stock. I mean, 10 times sales is expensive. 402 times sales? Price to book is 325 times. and it's got a current PE. Well, it shouldn't have a PE because it had a loss, but I should probably take that off. But anyways, guys, if you're one of the guys that bought this or some of these other pot stocks and you've made a tremendous money, and I'm going to be honest with you, I owned Aurora Cannabis like a year and a half ago, and I made money on it. And I sold it because it became overvalued. You know, I took a flyer on it. I knew what was going to happen. I knew the hype was going to come in. But I'm not holding it as a long-term investment. It's a burning match, guys. It's people that are growing pot. That's it. In a greenhouse. Not hard. So if you caught this wave, congratulations. But, you know, this is cautionary now. This thing's volatile. $50 drop on Friday. And again, you got somebody that bought it at $2.99. You're out there. I hope you're listening. It's down to 132. Please sell the stock because it's going to go lower. And you will sell it eventually after you have a 90 to 95% loss. Or it will sit fossilized in your brokerage account forever, and you'll, you know, be reminded of it when you every once a year go and look at your brokerage account. Don't lament losses. Don't what might have been, woulda, shoulda, coulda. Understand it's a bubble. Understand that it's over now, it's popped. Get out. Preserve what you have. I tried to tell some Bitcoin people this. People that got into Bitcoin at the very top. Don't buy it. It's overvalued. Please don't buy it on credit cards when you were still allowed to do that. People did it anyways. I don't hear from these people anymore. They probably hate me, you know, because I told them I busted their little dream. I didn't make Bitcoin go down. It was overvalued. It has no value. It's the same thing with this. This is tremendously overvalued on any metric you want to look at. There's no justification for this that anybody can make. Yes, the pot market's going to get bigger. Yes, there's going to be CBD derivatives that cure diseases. Don't you think that, you know, if this thing is a real big deal, that major corporations, like you already have like Constellation Brands that is into wine and beer sales getting involved. Coca-Cola's talking about coming out with a drink. If there's real money in this thing, it's not going to be some rinky-dink company like this that makes the real money off it. And the thing that really irritates me, and I'm just going to say this, you know, there's a guy out there or some wise ass that's going to say, well, you know, you're just jealous because you didn't catch this and I got it. Okay, you got it. You found that you were walking down the street and you found a $100 bill in the street. You found a diamond laying in the gutter. You picked it up. Now you're a professional investor. You got lucky once. It's the worst thing that can happen to a guy. He gets involved in something like this and all of a sudden he thinks he's smart. First of all, professional investors don't go anywhere near stuff like this. So if you think that you're actually know what you're doing because you got lucky for a 30-day period, I'm going to disabuse you of that thought right now. You're not a professional investor. You got lucky. You found a diamond or $100 bill in the street. Hey, you found a $100 bill in the street. Congratulations, you got lucky. You won the lottery. You're not a professional investor. All right, enough about this. I just get I mean, if you want some comic relief, like I said, go on Seeking Alpha or go on some of these message boards and listen to some of these people that, you know, have, you know, 100 shares of this stuff or got a, you know, went up 10 times and all of a sudden they're telling everybody, you know, what a professional investor they are and justifying the current price and speculating and giving you all kinds of theories and scenarios of how it's going to go up 10 more times. I mean, we see this over and over and over again, guys. I've been around a long time. Saw it in the internet stock, saw it in housing, saw it in, you know, over Bitcoin, over and over and over, same themes, you know, and eventually the things that we're involved with that are undervalued, like uranium and oil and some of these other things, they're eventually going to become overvalued. But we're not going to hold them and justify them when they become overvalued. We're going to sell them to the shoe clerks and bleacher bums. Okay, interesting. The thesis is starting to play out now in the oil market, like we've been talking about. The Iran sanctions are starting to bite. People are not signing contracts with them now because the sanctions go into effect in November. Contracts for delivery are signed in advance, and we're starting to see people scrambling around now that are trying to comply with these sanctions, trying to find oil. So what we're seeing is, you know, West Texas Intermediate crude was over $70 this week. Back over 70. It looks like it pulled back. You could see the stair step movement. That's what we want to see, higher highs and higher lows. And I think this next run takes us up to $80 a barrel possibly by the end of the year. Brent crude is already over $80 a barrel. These are incentive prices. These are prices where if they are continue to be maintained, and so far this year, the average price is well over $60 a barrel, oil companies will begin recycling cash into developments. We're already starting to see that, and I'll talk about that a little bit later. But Venezuela is still a problem. Its oil production is shrinking, and the Permian constraints are still there, and demand is relentless. Unless I don't see any risk really to this scenario of $100 barrel oil next year, unless there's some psychotic break in the markets like 2008 or some kind of worldwide recession, and that's really not on the table right now. So expectation is stair step up in oil prices, and I think the Trump administration is doing what it can to pressure our so-called allies in the Middle East, i.e. Saudi Arabia, the Emirates, Kuwait, to pump more oil so that we don't see a blowout in oil prices before the election, and this stupid policy of, going after Iran. I mean, what we're going to see is higher oil prices. That's it. So neocons are going to get what they want, and you're going to pay more at the pump. But if you're following this, listening to what we're talking about on a weekly basis here, you knew all this, and you're gonna make profits, not be crying at the pump. Wanted to review Goring and Rosenzweig came out with a part 3 on why they see higher oil prices. They've had a series over the last couple of weeks. I'll put a link to it in the video notes. But what you can see here is, and if you go and read their narrative, which I'll summarize here, is that you're seeing drilling activity in both of the shale basins of the Eagle Ford Shale and the Bakken Shale. And what's interesting here is that if you look back to where the peaks were back in 2014, fall of 2014 on both charts, you'll see that the drilling activity was considerably higher, and that was at $70 oil. So back in fall of 2014, we were at $70 oil, and you can see that we're currently at $70 oil, and you can see that drilling activity in the Eagle Ford is 65% lower than it was at the prior $70 level, and 70% lower in the Bakken at the same price level. So basically what it's saying is both times that we were at $70 a barrel, drilling activity is down. Now, why is that? The reason why, and the assumption is, and the thesis is that most of the prime tier 1 drilling locations that were very profitable and were going to produce the most oil have been drilled already. So what we're seeing is that now that oil prices are going back up, the incentive price is not high enough to cause to be drilled lower quality locations. You see, in an oil field, not all locations, not all areas are going to produce the same or are as prospective. And that's what we've seen. You know, when the initial boom went down, that's where the people are going to drill, and where the oil is easily found and easily extracted, a tier 1 location. Those have been drilled out. That's the thesis. Now, at the same oil price that we had 4 years ago, we see drilling activity down by 2/3. Now, if the price of oil keeps going up, obviously more rigs will start turning because marginal locations then become profitable to drill. But are we going to return to the previous levels? Maybe not. Maybe we're going to be in decline in these 2 shale locations. And that's the G&R thesis, and one that I agree with. So here's the Permian. It's the same situation. It shows, the fall of 2014, and at $70 a barrel, and you had, 550 rigs turning, and you see currently with the oil price at $70 a barrel, and just about the same amount of rigs are turning. So that tells you that there's still quite a few prime locations to be drilled in the Permian. And this is what I think the analysis shows. I mean, as oil prices recovered, there were sufficient tier 1 locations. Rigs started turning at the same level that they were in the past. But if you go back and look at the other 2 shale basins that were developed earlier in this shale cycle, we're not seeing that. So obviously, if the oil price stays around $70, $80 a barrel, and these rigs start coming back massively, then I think there have to be a pull back and punt and relook at the thesis. But right now, that seems to be what we're looking at is that we're kind of drilled out in these other two locations, and where are we at in the Permian? Because a lot of people are putting a lot of emphasis on these shale basins to bail out the world on this tight oil market. And that's really the thesis, that's really the argument. Hey, don't worry about it. There's plenty of shale oil here, and as the price goes up, you're going to be just inundated with millions of new barrels of production. Well, we'll see. That's not my thesis. So just to follow up at the end here, starting to see some upgrades by various brokerage houses and banks, research arms on oil services. Saw quite a few of the offshore drillers get upgraded last week and the week before. Just a small sampling that I was able to pick out in about 5 or 10 minutes. But do I really rely on what some analyst says? No, that's not the point. The point is to say that we were looking for that perception change or that phase change, and we're starting to see it now. I don't necessarily listen to these analysts, but the people that have money being managed by these different people, wealth managers and in these brokerage houses, when they call up their broker and say, hey, Sam, what do you think? Well, we've just upgraded the offshore drillers, Dan, and, the people start buying. So it's that phase change going from, hated to less hated, like we've talked about before. And then we go from less hated to, hey, this thing's recovering. And before you know it, over a period of 12 to 18 months, we've went to this industry's going out of business to the shoe clerks and bleacher bums telling me how it's going to never-ending prosperity. So that's what we're looking for. That's what's called skating to where the puck is going to be. We're sitting over there, and now the puck is getting ready to be end up where we're sitting. So that's why I wanted to highlight this. So that's it for this week, guys. I just want to thank everyone for the support. Channel continues to grow. Continue to pick up more Patreon members. Just a reminder, if you would like to support me, you can go to my Patreon channel page, and I will put a link to that. You can support me on a go-forward basis. If you support me for $5 a month or more, I will send you the current month's stock pick of the Actionable Intelligence Alert. That gives you a good little sampling of what kind of stocks that we are talking about in the Actionable Intelligence Alert. And then if you decide to take a full subscription after that, you can do that. So definitely appreciate the support. Channel continues to grow. I think now our theses are starting to play. Obviously uranium, we talked about it last week. That thing's getting baked in, and it's just sit back and wait. Get your positions on, guys, because when the big money comes in, these things are going to move. So if you don't have your positions on, you need to be doing your research on the weekends, not watching football from 12 to 6 tomorrow. You need to be researching stocks. You need to be thinking about getting money in some of these stocks, and you need to get prepared for these moves. So again, thanks for the support, and we'll talk to you next week.